Uh, Hi, welcome everyone. I would like to welcome you all the expert panel and to the session 2 of today, which is on the future and development of fintech industry. Um, First of all, I would like to invite all the experts on the panel to introduce themselves. We can start with Captain Raghu.
Can you hear me now?
Yeah, we can hear you.
Okay, so for those of you, I'm in an industry that's quite different from all of you. Or I've been in the shipping industry and derivatives trader for commodities and but mostly for commodities and trade. So questions relating to commodities and trade, futures trading, hedging, risk management, I'd be happy to respond. I was 20 years in Hong Kong running mobile chartering pretty much for the last few years and retired a few years ago from there. And now I'm basically consultant and do my own things.
Thank you. Now I would like to invite Mr. Sakanaru to introduce himself.
Hello, everyone. My name is Saka. I am the head of product marketing for Fintech and Ecosystems for QuickBooks in the UK, but I'm also simultaneously the founder of the Saka Group, which is a consulting company that helps other people, specifically with product marketing and Fintech. It's a pleasure to be here and really looking forward to a wonderful, fruitful discussion. You, Dr. Rav.
Take your mic, put your mic on.
Sorry, now I'd like to introduce himself.
Thank you, Ravi. I'm Vikram. I'm Director of Fintech at SPGN School of Global Management. I have been investor as well, and I am Fintech Ambassador for Master Government. I'm CA, CFS, ISA, and look forward to share my knowledge on this panel and also learn.
Thank you. Thanks, Vikram. Now I would like to invite Dheeraj to give a brief introduction.
Yeah, hi, I'm Dheeraj Khandelwal, chartered accountant practicing last 25 years into the fintech. I'm one of the promoter of the and mentor of the Trade Reboot Limited.
Thanks, Dheeraj. So just a brief introduction about me. I'm Ravi Chamadia. I'm the moderator of this session. I've been into IT consulting for last 21 years, majorly into digital lending for last 12, 13 years. I'm the co-founder, CEO of a blockchain startup called Sofocal and Chief Technology Officer of Trade Reboot platform. So now I would kickstart the session. So today's session is about the future and development of fintech industry. As we see, the fintech has had a huge growth in the last 10 to 15 years. If you see the global financial sector, which is expected to be around $26.5 trillion by 2022, fintech is almost more than 1% of the global financial industry. So slated to be around 187 billion by the first half of 2019 and growing rapidly with a huge CAGR. If you see the investments, the fintech has reached almost 55.3 billion in investments in 2019 alone. And there has been an expected CAGR of 25 to 30% growth 2019 to 25. E-commerce being one of the biggest growth drivers of fintech. And if you see some of the emerging tech, blockchain and regulatory technology are the fastest growing segments in the fintech industry. Blockchain is going to be worth almost $20 billion by 2024. And there's been huge cost savings, huge process efficiency, and customer convenience that we are seeing due to growth in fintech. Uh, so first, we see that let's touch upon the digital-only banks. So there have been a lot of digital-only banks that have come up, neo banks that have come up, which are targeting the same customer base as banks with more customer convenience, more access to customers. Still, we see that there are many challenges that remain to be solved. So, my first question to Mr. Sakanaru as to should a fintech typically go on its own completely, or should they partner with banks and incumbent financial institutions to offer bank-like services?
Yeah, thank you very much. It's a good question, and not to give the consultant answer, but it depends. For the most part, when you have a neo bank, their typical audience or customer profile tends to be millennials. Meanwhile, the incumbents tend to have, generations prior to that and are used to a certain way of doing business. So to me, this indicates that they don't necessarily have to go after the same base or even work together. The reason why a neobank would work with a large incumbent is perhaps, number one, the incumbent has regulatory approvals that the neobank would take a long time to get, or number two, the incumbent has perhaps a customer base of higher average revenue per customer, maybe because they're older, have a bit more wealth, or number three, maybe access to a larger customer base in general. So I don't think that they necessarily have to work together. And you've seen some initiatives, especially here in the UK, and I can speak from a UK perspective, where the incumbent traditional banks have tried to start neobanks with a small incubator, and many of them have shut down because they've realized that there were issues in terms of profitability. Maybe the skill sets of the people they had from the incumbent bank didn't work in this sort of new jazzy, millennial kind of atmosphere or landscape. So that would be my initial on take. And I just want to say that for the neo banks, getting millennial customers hasn't been a problem, but making those customers profitable has been. And I think that's where the challenge will lie over the coming years, to be very frank with you.
Thanks, Saka. So I'll just a follow up discussion with Vikram as to how do you see in the overall fintech ecosystem, not just in digital banking, but the other aspects of financial services, where do you see more cooperation than competition as far as fintechs and banks are concerned?
Good question. So I will continue to what Saka mentioned. There are two different ways of looking at this thing, specifically when we look at different countries and how people within those countries work with bank. Right? So specifically in India, we need to coexist because in India, license is very difficult to get for most of the items. And the regulatory requirement for getting licenses, of course, as a banking license, it is on tap, but it is not available easily. So when you are looking at the requirement when a virtual bank is coming, that is very different. In India, you don't have that scenario. And for countries like India, we need to coexist. We need to work together, bank and fintech, because bank know what is their strength. Bank understands that, okay, I am already there in this segment. I have customer base, which this fintech can leverage. While along with that, I can provide set of services which today I can't go ahead and provide easily because I'm not that agile. So everybody knows their strength and weaknesses, and they are coming together to make sure that they are synergizing something better. Now, when you look at other countries like EU or US, you have virtual licensing available. Even Hong Kong, for that matter, and Singapore very soon will have that virtual licensing done. And when you are looking at digital only bank, even the neo banking definition is changing specifically. So digital only bank, the way people envisages will also undergo change, because not only they need to maintain full stack security uh, and trust that you need to provide with digitization, and along with that you need to also identify that the product and services which you are providing are digital only product, right? So you need to also ensure, and everything today is becoming more and more digital. So technology will play major role. Along with that, people and processes will undergo change, because just saying that fintech can work with bank is easy to be said but difficult to implement, because each and every fintech will have their own different technology suite, and then people try to today make sure that you have an API layer which can become much more middleware where people then can collaborate. So I have seen API aggregators coming in the market, and there are multiple layers to that, and then people can work together easily. So there is another layer which is more monolithic in nature, which is coming on top of it. So it is multi-layered architecture, which we will see in future.
Thanks, Vikram, and thanks, Taka, for the views. Um, so now, two of the major concerns whenever we talk about digitization in the services, all the fintechs, etc. So two of the major concerns are talked about are privacy and security, whether it be on the data side, data of the transactions, data belonging to different consumers. So I would like to invite Dheeraj to talk about how blockchain, as one of the emerging tech, is solving some of the privacy and security concerns, especially when we talk about some of the new fintech innovations in trade finance and other financial services.
Thank you, Ravi. I think there's some important questions over here right now. In the digital space, every people are now accessible the data, and every and most of the corporates are looking at a secure solutions. People have the access of their database. People have concerns which is whether it's a data is secure or not, how they will use it, and that is why the blockchain technology is about secure, and it's completely secure system where the chain systems are made. And when you talk about a Bitcoin or any other token, the digital currency, that's have a 56 bytes system where you cannot break it. And even in the lot of technology is driven, platforms are coming which are at 256 bytes are coming. So I think more and more technology driven peoples in the blockchains are coming, and it's more secure, and people can trust on it, and people feel that key if the corporates are using a blockchain system, they feel that key it's a completely in the safe and secure environment.
Yeah, thanks, Dheeraj, for the perspective. So, talking about risk management, we see one of the core challenge with risk management is due to lack of availability of data or access to data or the information whenever it is required. And with digitization, what we are looking towards is more collaborative platforms where data can be accessible across all the different stakeholders, and especially access to data in almost near real time. That is what has been the endeavor of all the digital platforms. So I would like to ask Captain Raghu as to what kind of fintech innovations you are seeing in the risk management space.
Right. Thanks, Ravi. Obviously, yeah, if you have a platform on which data is at your fingertips, and particularly when you can do technical analysis of charts on that same platform, you have live market data available on one platform. At the moment, when we're trading, we use multiple platforms. We use Bloomberg for certain things, we use Platts for certain things, we use Reuters for other news, and so on. So we use multiple platforms. So if you have uh, market intelligence, you have the ability to do technical analysis of charts, and finally it links up with your own portfolio, your own back office structure, where you can at a glance see your net long or net short position. That'll be a tremendous innovation. There are some platforms that provide some of these things. So what most of us end up using is multiple platforms. And the idea is if one particular platform can provide all of these requirements with one user interface, that would probably be a winner as far as IT innovations and risk management is concerned. The key is also to be able to integrate with your back office, to integrate with your portfolio, with your position, integrating derivatives with your physical holdings, integrating options, warrants, and everything else, to be able to evaluate each and every one of these different management tools, risk management and hedging tools. If you can integrate them all on one platform, that would make a tremendous innovation in terms of IT as far as risk management is
So
concerned.
thanks, Raghu. I guess there is some net connection issue at Dr. Ravi's end. So meanwhile, I will touch upon two of the questions that he mentioned just right now. So first of all, when it comes to identity, security, and trust, there are three layers within them also. So when we look at identity, identity is typically to prove who you are at a given point in time, along with the metadata or parameters related to that. And today, the way we are looking at identity is very different because people realize that I don't need to look at that identity in at one point in time. I need to look at his social identity. I need to look at his e-commerce identity. I need to look at his investment identity, so and so forth. I have so many different layers to identity, and that creates a whole new way of looking at how the identity works. And identity creates trust in a way because people can trust someone, and then that trust brings further trust in transaction, and people can rely on each other. So identity, when you are looking at someone who is having very good e-commerce trust score, so you are more comfortable doing business with that person online even though you don't know him, because that trust layer helps with that. And then security, again, when you look at security, there are two layers to security. And number one layer is how you are looking at security by design, because security, when you are thinking about that as an afterthought, then it is not secure at all. You need to think the security at the design stage. And when you are looking at the participants, security is as good as how users are using the security parameters, right? So if it is not secure enough, then you can't do much. So people need to also understand how to work in digital environment, and then the security can be really useful. And to risk management, as you rightly mentioned, that depending on the use case, the risk management also changes, because when I look at startups, people start with lending, but they don't know that underwriting process is not the only thing they need to look at. The risk management along with underwriting is something which is very critical. And traditionally, banks are very good at this, by the way. But when we look at new age lending systems, when we look at alternative data which is available for this lending, it becomes almost very difficult for these old players to make sense of that new data. And that's the reason we will see new set of skill set required, new set of people coming up who will understand this alternative data and would like to then understand and create a system out of it. So these are my views on this. Saka, would you like to add something to this?
Yeah, I think there are two components. So you mentioned data. I think liberating or identifying who the gatekeepers of that data is differs by geographical market, but that's the first step in being able to assess risk in a more accurate manner and with more information. Here in the UK, we have, the FCA, which has required banks to sort of share some of their customer data and things like that. But I think identifying who that gatekeeper of data is, it could be the accounting and tax firm, it could be whoever it is, and allowing that data to flow would help better risk analysis, mitigation, and things like that. And the second thing, at least what I can see from a fintech perspective, I'm not a blockchain expert or anything like that, is the fact that people are trying to find smarter ways around traditional risk mitigation. So for instance, if you look at invoice financing, so for instance, a small, medium-sized business generates an invoice and they want to get a loan against that invoice, right? The way that the invoice financier will mitigate that risk is looking at the quality of the customer that the invoice was made out to. So let's say I made it out an invoice to I don't know, Tesco or Sainsbury's here in the UK, which is a large grocery store that everyone knows. And then the financier uses Tesco to judge whether this invoice will likely get paid. And so they know that they can loan against it. So it has nothing to do with the actual small and medium-sized business that's making the loan or anything like that. So that's, a smarter way to look about, to think about risk mitigation. When you look at Tesco, for instance, a large company, their data is available everywhere. You can see what their financials are, how likely they are to pay, what their payment terms are. It's a huge company. It's public, so everyone can see it. So I think until the availability of data is solved and available for everyone, people are going to find smarter ways to mitigate risk beyond traditional ways. That's sort of my high-level thinking.
Right, I agree with you, Saka. And when you look at, as you rightly said, gatekeeper of the data, right? And specifically, when you look at gatekeeper of the data, you also require, in my opinion, policy brokers, because today in the world, we have different data privacy laws. And there are places where you are not required to share data with third country. And then suddenly you realize that in a truly global environment, when the blockchain is implemented, you need to have a policy broker, which will allow us to pass on the data to the right people at the right time, and then filtering out the data based on the data sourcing rules and filters which will enable us to comply with the regulation in general. So these policy brokers are required from the regulator side, and then they can keep on updating that policy brokers. That is a requirement which I personally believe is required. And coming back to you, Ravi. So Dr. Ravi is back. Over to you, Ravi.
Yeah, thanks. I think for the detailed perspective. Me?
Yes.
Yep.
Yeah. So now coming on to the payment side. So question to Saka, that when we see the fintech growth or the disruption by technology in the financial services space, I think payments has been always at the forefront. Most of the innovations first start with payments and then percolate to other financial services. Just few days back, we heard the news that PayPal announced that they are starting to give support for cryptocurrency as one of the payments, right? So now, from a perspective of the coming decade, what kind of trends you see, innovations you see in the payment industry, in the financial ecosystem?
It's a great question. So, as you mentioned, the first step was getting the endorsement of large firms for these new types of technologies, and that PayPal announcement is testament to it. So it's becoming really important, not just from a consumer mindset, but even now from a large, industrial mindset. Having those names and that credibility behind it is really important. What I think will happen over the next 10 years is, the payments industry is starting to take market share. And the reason why is because, number one, it's becoming more frictionless, so to speak. So there's less steps, there's less information that I need to put in order for a payment or transaction to happen or for it to go through. And number two, as a result of that transparency, we are seeing lower costs, right? So, if someone takes their piece of the pie and then passes on to someone else and they take their cut and they take their cut, everyone can see what happens in that journey. So I think the costs of payments are going to go down, which we're already starting to see with things like, we have Western Union and all those, and then all of a sudden you have TransferWise and all these kinds of companies that are lowering those costs. So I think what you'll see is greater transparency. I think you'll see less friction. But in some regards, I also see a case or scenario whereby it'll be winner takes all, because I think one player will create those dominant rails, because they'll probably have the mass and the critical mass, more specifically, to have those rails. And once everyone starts to get onto that particular rail system, it's all about supply and demand, right? The more people you have using it, the cheaper your costs can be, X, Y, Z. So I do definitely see a case where there's sort of become one, maybe two large payment providers, full transparency, frictionless, and who knows, maybe it'll be one of the Chinese players or maybe even an Indian player, you never know. But I think that's what's likely going to happen. I think
Ravi, you are mute. Ravi, you are mute? Yeah.
So now touch upon one of the other major factor in the fintech growth is the regulations. So at times we see there are kind of burdening regulations on one hand, which may be hampering the growth of fintechs. Or at the other hand, we see a lack of regulations, like especially in the case of emerging technologies like blockchain, due to which the growth is being hampered. So I would like to ask Vikram as to how regulations are going to pan out, or what kind of importance we are going to see from the regulatory organization of fintechs.
Sure. So when we look at specifically on fintech side, we have seen that all the regulators, thankfully, they have identified that sandboxing is required, and because of that, they have started the regulatory sandbox to try it out in terms of whether your concept is acceptable in the broader market. They are also allowing open sandboxing. RBI recently allowed for the open sandbox for payment, right? And some things which are now moving towards, right? Let's look at the next 3 year down the line. So when we are looking at these projects which are going to the sandboxing, they will come to the market, and when they reach the market, I'm more hopeful that with proper regulatory backing, the investor will be more comfortable, because end of the day it is coming through the regulatory sandbox, and it will create its own new product life cycles. However, one thing which is very critical, and I'm personally thinking that India should be taking lead, because China today is much ahead than us in CBDC, which is central bank digital currency. And given that blockchain is here to stay, it is more about how well regulator is able to use that rail and infrastructure to create something which can be used by each and every ecosystem player. So when we are talking about a simple example, just to give it to you, when we are talking about payment, right? Payment has multiple different parties involved. So when I'm making a payment to you, I need to also pay GST, for example. I need to deduct TDS on that. And when you are looking at this different sub payments which I'm supposed to make, if you are having CBDC, which is having blockchain as a backing, suddenly you are having a small smart contract working on top of it, which can automatically accumulate all this small payment to the government, and without paying in advance. Today, I need to pay in advance. Even before I receive money from you, I need to pay GST. But in that case, automatically what can happen? Once I receive money from you, then the GST is, let's say, paid, or similarly, I can deduct the TDS and then I can pay. So this will even allow us to have more greater transparency, and all the ecosystem player will have better working capital workflow. And it also has more traceability, governance benefits. So I personally believe regulations will play a major role in this, along with what I mentioned earlier about the policy broker. Data privacy is going to be major burden for everyone. So government should come up with the policy brokers which can identify that, okay, this set of data can leave India, or this set of data can't leave. Something sort of creating a data filter which allow people to then implement those once data protection bill comes into India as well.
Right. Thanks, Vikram. I think very nicely put. So regulations are going to be key organizations for the growth of fintech, a sustainable growth of fintech. Now, we see that even after so many fintechs disrupting the financial sector, including banks, traditional financial institutions, as well as the fintechs, we still see when we talk about financial inclusion that still there's a huge population which is largely marginalized as far as access to financial services is concerned. Now, this topic again is a very open topic based on different financial services. I would like to ask Captain Raghu as to how do you see innovations in the commodity trading market are panning out so that more and more people can get access to the different parts of the financial ecosystem.
Ravi, key is obviously education. Obviously, access to information is very important. Education, in terms of opening it up to the general markets concerned. One of the innovations, actually, this is going back to another question that you had raised about security, is humanoids. Humanoids where biometrics are being used now. I've been involved with a group of people who are now trying to get iris scanners online for your major financial portfolios. So these are things that are of concern to people. Are, of course, in terms of digitalization of their portfolio, is security, and people are using biometrics in different forms. Obviously, there are face scanners, facial scanners, finger scanners, and so on. Probably the most secure are iris scanners, but at the moment, the cost of the hardware is what is preventing it from becoming more universal. But in terms of getting the general public into trading online, trading commodities, trading derivatives, and other hedging tools online, to an extent, is, as you, one of the questions that you raised earlier was the security of the trade. There are a lot of innovations in terms of that. In terms of getting into the market, getting it accessible to every, people are trading stocks, people are trading shares, markets, so on, and futures and so on into the market. It's education primarily and access to information. These are the two things that people in general lack. I mean, unless you're subscribing to all these paid channels, which are quite expensive, general public doesn't have access to online information.
Thanks. Um, so, as you know, mentioned earlier, and mentioned by Saka as well as Vikram, that banks are now, cooperating and collaborating with fintechs for imbibing or adopting innovations within the financial sector. Trade finance, supply chain finance, payments, etc., are some of the major industries. So lending and finance, lending and payments, I think, are two major industries within the financial ecosystem which are being disrupted. So my question to Dheeraj is to what do you see are the key factors which will, motivate banks to partner more with fintech and embrace innovations?
Well, Ravi, I think in India and globally, globally, the world are moving fast. In Western European countries, most of the banks are taking these fintechs into their system. They are like rightly said by the Vikram. No need to take it on the board. There's an API, bucket is there. Through the API bucket, they are adopting the lots of the fintech. In India, also digitalizations happening in the retail segments. As far as the blockchain and commodity segments, it's yet to see the lights. And the banks are still figuring out. Banks are still working on the blockchain, how it can be accommodated in their system, because they have all security concerns are there in their banks. They still figuring out, but I can believe that the worlds are moving fast. Within years, we can see that in last year itself, we have seen a lot of trade finance companies has emerges in the world, in the Western European culture, and in the Singapore. Now it's in India also. A lot of fintech companies are coming up. I believe that now it's a requirement. Every bank has to merge it, because this is not the core functioning of the banks. Bank has to need a lot of business which can be provided by the fintech solution company, which can integrate with them. And I believe every banks are working to synergize with the various fintech company. So things are slowly moving in the trade finance side, and within a year it will be a pickup fast in India concerns.
Thanks, Dheeraj. So now, as we see, emerging tech ecosystem is growing very rapidly, and some of the challenges in the IoT ecosystem has been security. But as we see now, more and more IoT to IoT or device to device interactions are increasing, And within the next few years, we'll start seeing a trend where smart devices um, will start taking decisions on behalf of individuals, right? Leading to a number of other challenges. And from their perspective, there have been a lot of discussions around how blockchain can, provide the necessary infrastructure for enabling payments, micro payments across different IoT devices or device-to-device interactions. So my question to Vikram and then followed by Saka is to how do you see blockchain playing a role of an infrastructure which will enable this kind of trustless environment where these kind of payments will be enabled?
So thanks, Ravi, for this wonderful question. There are two different parts to this answer. One is that how do you verify the identity in ever-changing world of IoT, right? Because IoT is growing like anything, and you have billions of devices coming up. So because of that, only we required IPv6. Right? We came to IPv6 version because of that. But however, we still need to then identify that within that ecosystem, today, when you look at website like Shodan, which allows you to identify insecure IoT, and you can immediately ping and then look at somebody's camera, and you can identify that, okay, this is a smart fridge available, which is having default password. It is proven that 90% of the people don't change the default password at all, right? So when IoT comes into picture, people don't even care about basic security, and that becomes very difficult for manufacturer to make sure that it is safe enough. And specifically in this scenario, big data, when it comes to analytics, all these things are required because IoT generates tons of data almost every second, right? And when we look at what data should be shared versus what data should be processed on the edge computing, that becomes very critical. Blockchain plays a role on this scenario. Number one, it can identify the trusted network by identifying using, let's say, zero knowledge proof, saying that this is a part of the same network. It can authenticate that node automatically, and machine to machine payments. So in India and also in Japan, there are two use cases which are there on machine to machine payment. So let's say you are having a 3D printer, which is very expensive. And typically what happens in India, if you are planning to have industrial grade 3D printer, it will cost you in lakhs. So people like you and me who have created some 3D design, we can just rent that out. But instead of bringing it here, we can directly give a command on printer saying that please print, and it will connect to that remote 3D printer, print it for us, it will get couriered to us, and the machine to machine payment automatically happens, right? So there are so many use cases where machine to machine payments are happening today, and there are special protocols also for that, right? So IOTA, for example, is one such project which looks at machine to machine payment architecture and protocol. So more and more protocols will be there very soon. And the second part of my answer comes when you look at how IoT devices interact on a network basis, right? Today we are talking about 5G, but IoT requires very different kind of network. They require network where the bandwidth might be lower, but it requires very low energy. So you have completely different network requirement in IoT. Blockchain also helps you to reduce that uh, cost on security, because end of the day, security is what requires you to have more bandwidth and more edge computing requirement. In this scenario, while edge computing is becoming more and more faster, blockchain can allow you to remove that trust layer from the IoT and can create that blockchain trust layer independent of IoT device. That becomes very useful.
Saka, anything you would like to add?
Yeah, it's hard to add to a great answer, but I'll try my best. There were a few things you said that stood out to me. Number one was the security aspect and the fact that the cost is a big factor, because people look at security and privacy as an additional cost to doing business. And then the second thing as well that comes up to my mind is liability, right? So I don't want to incur that cost, or I want to shift the liability of privacy and making sure everything is right onto either the manufacturer of the IoT device or onto a third party of some sort. And it fits kind of nicely into blockchain, because then I, as either a manufacturer or whoever's involved in the process, outsources that liability to the blockchain platform. So whatever platform initiated that payment or that transaction or whatever it is between devices will take that liability. So I think innovation will happen within this space if we are able to, create infrastructure or create processes that allow for that exchange or the release of liability onto a third party. And it seems like blockchain fits into that narrative pretty well. And also touching on the fact that, there are other ways you can go about trying to alleviate the privacy and security concerns which are raised for IoT. So for instance, if you have, I don't know, a fridge that orders on your behalf, when your eggs are out or something like that, and then in week 5, all of a sudden it makes an odd purchase decision. Looking at those anomalies is one way you can mitigate the risk of privacy or security or getting hacked and things like that, because then you can see if anything's out of the norm. So I think that's one way we can mitigate it. But again, that requires a lot of brain power, a lot of tech capabilities, a lot of sieving through data to see what those anomalies are, especially if you don't have the machine learning AI capabilities to be able to do that well. I probably don't have to tell you guys how much banks spend trying to capture fraud and things like that. So it is a big cost to doing business. So that's something else that I think of. And I think blockchain does have a strong part in here, not because of the smooth transaction process necessarily, but I think it gives people the ability to outsource liability.
I think very nice perspective. Thanks, Saka. Captain Raghu, anything you would like to add, maybe from a perspective of commodity markets and hedging, as to what kind of emerging tech you see in this space, whether it be AI, machine learning, whether it be blockchain, whether it be smart contracts? Are we soon going to realize a complete paperless process with much better risk management as far as commodity trading and hedging is concerned?
At the moment, I mean, digital signing of most documents and so on is already taking place. So everything, what I'm doing with most of my banks online, majority of the international banks have digitalized most of their trade orders, their all the transactions that I'm doing in terms of commodity trading or even investments in various things are all done with digital signatures now. So that part of it is already, I think, innovated to an extent where it is paperless entirely. So you just get the document online, you digitally sign it, and it goes back to them. So this business of couriering documents for signatures and the hard copies being couriered back and so on has already disappeared in many banks. I don't know to the extent in India and other countries where it has taken place, but certainly the banks that we deal with in Singapore and Hong Kong have digitalized most of their processes. So which is, I think, pretty good to be able to do all that without the traditional paper trail that used to take place. So no, in terms of commodities and risk management and hedging and so on, to a large extent in international banks, it has already taken place. I think Vikram can probably add if the Indian banking sector has followed suit or not. But I've seen that with all the international banks that I'm dealing with now.
Absolutely, that's right. So one of the perspective which I have here is that banks do have adopted technology in a big way. There's a lot of digitization that has happened. But if we see closely, I would say still the front-end layer is digitized. So customer-facing front-end layer is still digitized. And that's why we see a lot of payments, capturing, etc. is happening in real time. Customer have much more convenience now, availing different financial services. But if we still go deeper and see all the back-end systems of banks, still we are quite traditional. Still, the innovations is a long way, and that's where I see some of these infrastructure level technologies which are going to transform the way infrastructure is being managed. So Vikram, anything you would like to add, because you have been with the bank, you have been as an academician, so you have experience on both the ways as to how the backend infrastructure, backend systems of banks are going to.
So sure. So when I look at look, there are two parts to it. That one is AI, ML, and IoT, right? So when I look at IoT specifically, when you look at most of the platforms using IoT will come with their own API integration requirement, and you can simply integrate with whatever platform you are using. But unfortunately, what happens? The cost of customization is very high. When you look at any banking software, the cost of customization is so high that they end up using another platform altogether for monitoring that part, and that creates another process on top of what they are already doing, right? So when it comes to automation, I have seen more and more banks are investing into RPA, given that it allows them to automate end-to-end processes where human intervention is required. Just to give you a small example, right? So in one bank, I have seen that they implemented a live tracking of shipment in trade finance, and then when they did that, they realized that they need to download certain documents, and they need to also track that data every few hours, saying that whether it has reached or not. So instead of that, they can use the API directly from the provider, and on the WebSocket side, you can directly get the final confirmation whenever it has reached a particular destination, right? Rather than you manually checking every time. So some of these things are automated from the vendor side, while some of the things they need to automate on their end. So, for example, Yes Bank did RPA for entire trade finance procedure, and they integrated with RBI's data. They integrated with multiple different data points to allow this entire trade finance procedure to get over within few hours rather than few days, right? So it allows them to optimize their processes, make it more efficient, and make sure that it is at a scalable level. One more thing which I wanted to add on the AI/ML side, people realize soon that okay, AI/ML is good, but regulator is not happy because I can't go with AI/ML model and tell to my regulator that look, this is a black box. I've created beautiful black box and I can put some value. Magically, it gives me some answer. Regulator will not agree to that. Regulator will, of course, look at why you did what you did, and for that, people require explainable AI/ML model, and that explainable AI/ML model is something people are now working more on. And just to give you an example, IBM, then you have H2O. There are so many platforms which are now providing you models which are explainable. Why, let's say, this credit decisioning is done, why it is rejected, why it is approved. And when you look at factors available, right? So you do PCM analysis and you identify, okay, this is a principal factor, this is a principal component which we arrived at to look at this inherent cause. And then regulator is also happy because now it is no longer black box model, and people can then easily prove why they are doing what they are doing. And this is going to be a trend in a coming future as well.
No, I think great insight, Vikram. So this is something which has been talked about, AI models, that slowly and slowly AI models are becoming black boxes. And a time will come when even the people who have built the model, they will stop understanding what is running the model, right? When the model itself will evolve to a level.
True.
So do you think open APIs? Before that, just for the benefit of the participants, so RPA, which Vikram mentioned, is robotic process automation, and it basically allows an organization, especially banks, as you mentioned, to automate various processes which require manual intervention. So you may have one system, you may have another system, and but there may be some manual intervention. For example, you may need to download some kind of report from one system and take some part of that report and put it into another system. So through robotic process automation, without overhauling the two systems entirely, you can build a bridge using RPA so that those kind of automations of processes can happen within an organization. Now, coming to the question, Vikram, so open APIs have been talked about, where a lot of thrust has been given on open APIs, but banks are skeptic and wary that it will give away too much of data access to different fintechs. And from that perspective, but fintechs require that kind of rich data because only bank has access to that kind of data. So when if you want to run AI models, if you want to build good GUI based analytics engine, you require data. So where do you see a balance needs to be formed through which open APIs will help pick up the fintech revolution?
Sure. So, in my opinion, we are specifically in India, we are fortunate enough that we have Sahamati, which is account aggregator ecosystem. And when we look at Sahamati ecosystem, specifically in India, it allows you to have that layer, trusted layer, where financial institutions can share data with end customer, or let's say a user or fintech who will consume that information. So you have FIU and FIP, provider and then users. So when we are saying users, in this case, the users may be a financial institution, other financial institution, or it can be a fintech company as well. So when we are looking at open API in India, financial ecosystem is already having Sahamati ecosystem. Apart from that, let's say mutual fund, let's say insurance, these are the segments where open APIs will create even further opportunities for the startup, right? And Samati is already talking to them about creating that ecosystem already, which is there on Samati, so that it can be much bigger ecosystem later on. However, when you look at globally, so when you look at globally, you have PSD2, you have several other ecosystems which are growing, where the concept is that you also will gain. Once you share something, you are also gaining from it. It's not like you're always at loss. Why it is so? Because when fintech is getting some data, right, it is understandable that bank may not feel comfortable, but banks are custodian of the data. They are not owner of the data. So it is very simple logic that if you are a custodian of the data, let owner decide, because custodian can't decide on what they want to do with the data. If the owner says that I want to share my data with fintech company so that my life is easier, then of course you need to allow that to happen, and there is no two way about it. While banks may feel that it may be a security threat and something like that, to benefit of everyone, then you have technologies available to make it more secure. So that is not an excuse. You need to just spend more on that, right? And in my opinion, similar to India, when you are creating some ecosystem-driven initiative, then only it will work. Because in this case, Sahamati is taking care of how the rails are laid and then how the infrastructure is going to work. So there is someone who is taking ownership, and then only that ownership will allow people to come together, identify and understand what are the benefits. And as I mentioned, end of the day, ownership is with the end user, so they need to decide and provide consent. So this open API ecosystem is going to grow further, and in next 2 years down the line, specifically when we are having data protection bill in India, we are going to see that everyone is going to use this for sure, because without consent you can't take anything, and by creating your own consent architecture you are going to spend millions. Rather than that, why not use existing ecosystem like Sahamati? So that is very critical. And to answer your other part of the question, when we look at end-to-end open API growth, just look at insurance industry. You have Discovery, you have several other companies in the market, where what they are doing, they are looking at multiple APIs which are available in the industry, and then they are making it available for distributors to just connect to. So it becomes very simple for distributor to start distributing 10 different insurance companies product at one go. They don't need to integrate with 20 people differently. And today you know how difficult it is to open one door at the right corporate and then get it successfully closed. So that time investment that you are doing, the chasing that you are doing, right, that you are eliminating from the picture, and suddenly you are creating much more robust business model, which is win-win for everyone.
Thanks, Vikram. So, just a follow-up question to Saka as to, so there's a lot of collaboration that happens between among the fintech organizations themselves. You being part of Intuit, and there's a lot of collaboration that you do because you have this rich data. I'm sure you must be collaborating with other fintech organizations to enrich the overall fintech ecosystem or leverage synergies. So your take on that?
Yeah, there's a lot of collaboration, and it's the result of the fact that if we don't collaborate, our customers end up with a fragmented experience, and then we leave the door open for a potential competitor that ends up aggregating a lot of these to take, the biggest share of the pie. That's number one. Number two, we know that we can't be everything to our existing base of customers. We could be 3 or 4 out of the top 10, but they are going to find those other services elsewhere. Now, if we can be the gateway or the introducer to those other services, then at least we are still in control of that customer journey. We still own the customer and things like that. So, those are 2 ways that we do it. And then number 3, we also gain credibility or an improved brand. So for instance, right now I'm working on a partnership with PayPal. And we have our invoices that customers can send on our platform that are pay enabled, so that they can send an invoice and get paid directly on the invoice via PayPal, as opposed to bank transfer or online, all that kind of stuff. I mean, being associated with a brand like PayPal is good for us. PayPal being associated with QuickBooks or Intuit is great for them as well. So we're solving more problems, getting better brand perception that's out there, and we're still owning the customer journey experience in some way, shape, or form. Now, that's one side of the equation. The other side is the fact that these new neobanks and challenger banks are actually starting to creep into our space. You'll see some of them starting to do tax and accounting or other things. So it is a double-edged sword, because if you collaborate with them and then they end up taking, your customers, and your customers start to do tax and accounting on their platform, you've lost your customer, right? So, you have to proceed with caution, but I do think there's enough room for us to all grow the pie together. And ultimately, as a customer, I am interested in solving problems. I don't really care who solves the problem. It's nice to know it's a good partner or trusted brand, but whoever solves my problem is where I'm going to go to at the end of the day, right? That's just the truth. And so if I can solve more problems with QuickBooks, whether that's through partnerships, white label solutions, or whatever it is, that's what I'm interested in at the end of the day.
Great, thanks. I think very insightful. Now, since the time is short, I'll cover was just last topic of the session today. So one of the new area which has emerged out of blockchain technology in the fintech space is the concept of decentralized finance, in short called DeFi. And there's been huge investment that has been happening in the last 2 years in the DeFi space. Still, it's growing. The size of the DeFi market is very minuscule, very small as compared to the global financial market. But there's a huge promise that is being made. And it, of course, comes with its own set of challenges also in the short run. So, Vikram, your view on the DeFi space, how it's growing, and the kind of challenges that it's seeing.
Sure. So very interesting. Specifically, this industry is right now rapidly changing as we speak. And when we look at several protocols which are created, right? So when you look at DAI, or when you look at different lending protocols, right? So I will divide this DeFi market into 4 parts. One is your traditional digital payments, which of course is a standard thing which everyone does. Then you have lending, which is mainly peer-to-peer lending, effectively, where you have over-collateralized fund which you have put, and based on that you can then lend, and that is another industry which is growing. Then you have derivatives, and then you have decentralized exchanges, DEX. So on derivatives, you can have assets, you can have different options available, and interestingly enough, on DeFi, you can have perpetual derivative contract, which is impossible in the real world scenario, which on cryptocurrency you can have, right? So you have perpetual Bitcoin contract, as well as you have perpetual Ethereum derivative, for example, right? So you have very innovative products. In my opinion, India is not yet ready for these complex products, but when it comes to looking at the global market, it is very refreshing to see that how synthetic product you can create, right? DeFi is all about creating synthetic product on top of cryptocurrency and then making sure that you are able to derive the value, right? So you have yield farmers in the market, you have wild west over there. People are getting 100% ROI within few days, and those things are bound to happen when system is new, right? We saw that same thing happened in ICO market boom, which was in 2017. People used to get money for everything and anything, right? So right now it is somewhat risky to get into that unless and until you know exactly what you are doing. But once it settles down, right? Once it settles down, it has a huge potential to change the way we are looking at finance and banking in general, right? And banks, specifically in US, I have seen they are also partnering with these players to make sure that they are playing role of custodian, they are playing role of derivative market maker, and that is something which is very encouraging from the perspective of blockchain ecosystem. Because when we look at the financial inclusion, the cost of reaching out to the customer, cost of managing that customer, all those things are going to become very critical points in future. And when you look at DeFi, the main inherent benefit in DeFi is that you are able to do all these things at very lower cost because there are no intermediaries involved. Then you have trust layer, which comes from the smart contract itself. And then using more new technologies, you can make it more secure. And once you have more banks entering into this market, this will become more global in nature, and then people will be will having trust more on the new players as well. Because today I can't trust my counterparty easily, but when you look at on the ecosystem level, I can trust the platform. So I can trust the maker, I can trust, let's say, Aave, and then I can use that for making sure that this algorithm that is governing everything rather than me trusting on somebody's algorithm.
Right. Thanks, Vikram. Now I think I'll bring the session to a close. Before closing, some closing remarks from either Captain Raghu or Vikram. You would like to add anything for the benefit of the participants?
Nothing more for me, actually. If there's anybody has any questions online or something like that, I'm happy to answer. But otherwise, nothing.
Sure. So I have seen that we have answered most of the questions, and the one question which audience have asked, I will just cover that very quickly. So, is audit trail available in blockchain? So, blockchain is mainly useful for that. However, in the traditional ecosystem, you can use Amazon's QuantDB or something like that, right? QuantDB is also available, which allows you to have similar functionality of audit trail. But blockchain is not only for audit trail. You have so many different advantages on blockchain. That is the reason you are using it. So audit trail is one of the inherent feature, but along with that, you have so many different features like you can federate your trust, and you can augment some of the features which are there in the financial ecosystem today into transfer of value, and you can bring all the parties on the same platform, and it can be through the secure channel when you are using private blockchain, and all those features are available. So it is blockchain is not a silver bullet for everything, but wherever you have a good blockchain use case, then it is going to give you great ROI than the comparative traditional ecosystem. So that's it from my side. Thanks.
Thank you. And so just to summarize the session, I think it has been a very interesting session. We talked about payments, we talked about lending, we talked about how fintechs are growing rapidly, exponentially, and the growth is will continue to happen in the coming decade. At the same time, we are seeing a huge collaboration happening among the traditional financial institutions and fintech players, and that collaboration is the key, where banks and financial institutions bring in their set of expertise, their set of strengths on the table, and at the same time, fintechs being agile, being innovative, bring their benefits and their strengths on the table. So I think we are in a scenario where the growth is huge, and and then we talked about some of the areas where emerging technologies, especially AI, machine learning, IoT device interactions, and blockchains are playing a major role. Blockchain being the infrastructure layer. We are talking about decentralized finance, which again is going to be a major reckoning force in the coming few years. So with that, I would like to thanks everyone, thanks the experts on the panel, as well as all the participants for taking out time and attending this session. Thank you. Have a great evening.
Thanks. Bye.
Thanks.